The life of a college student. You've got class, you've got late night studying, at least for most of us. You've got possibly a job, and you're trying to balance a social life. Last thing on your mind is probably a credit score. That is, unless you clicked on a video about credit scores in college, which if you did, which I don't know how else you would be here, you're in luck, because that's what we're going to talk about in today's video, how to get a good credit score while in college. This is a simple dollar. My name's Dustin. If you're new to the channel, we make videos on everything related to personal finance, so make sure you drop down and hit the subscribe button so you don't miss a future video. We also put links to everything that we talk about in the description below, so drop down there before you leave so you can catch those as well. And if you get any value from this video or just enjoy it, we'd really appreciate it if you hit the thumbs up. So credit scores generally range from 300 to 850. Anything over 700 is considered good, anything less than 650 is considered bad. When I think about a credit score, there's a lot that goes into it, but it just aggregates up to a single number that somebody can look at to give an idea of how good you are at borrowing money. Lenders use that as one of their primary data points to determine if they're going to lend you money and how likely they are to get their money back. Unfortunately, the average credit score for a person between 18 and 24 is only 630, so that's a bad score. And often people in college don't have a credit score at all because they haven't taken on any credit. Now, when a lot of people think about credit scores, they think about buying a house, and so they put off trying to work on their credit score until they're looking to get a mortgage, but that's really a mistake because a credit score impacts a lot more than just a mortgage. So when you go get a job, your potential employer may look at your credit report. When you go to rent an apartment, they may look at your credit report. Even with student loans, having a good credit score can reduce your rate. And a lot of recent grads like to consolidate their student loans after graduation, and having a good credit score will help you in that process as well. If you're in that process right now, we'll leave a link in the description on how to consolidate your student loans. So the bad news is, even if you don't have any negative items on your credit report, having little to no credit history is in itself a bad item. So even if you don't need to borrow money now, if you go ahead and begin working on your score, it's going to benefit you whenever you do need to borrow money. So let's go ahead and talk about ways that you can begin building credit. Now, credit cards are the low-hanging fruit when it comes to borrowing money. Now, I know a lot of people get nervous when you hear about credit cards because you've probably heard of somebody that got in credit card debt and never could get out, and it ruined their finances. There's good reason to be worried about credit cards. They can absolutely be a wealth destroyer if you carry a balance on the credit cards. The credit card interest rates are generally the highest in the financial services industry. And so it's one of the worst ways to borrow money, that is, unless you pay off your balance in full every single month. So I currently use a credit card for basically every purchase I make, but I treat it like a debit card. If I don't have the money in my bank account whenever I swipe the card, I don't use it. But using a credit card just like you would a debit card is going to begin building your credit history. Now, a few credit cards to consider are the Journey Student Rewards from Capital One. This card gives you 1.25% cash back when you use it, and that cash back can be applied toward your student loans. There's also the US Bank College Visa card, the Citibank Thank You Preferred card for college students, and the Surge MasterCard. Links to all of those will be in the description below. Now, don't get too excited and apply for all of those all at once. New credit inquiries actually impact your score as well. Think about it from the lender's perspective. If you go out and you apply for every single credit card that you possibly can, it may be because you're having some financial issue and you need to borrow as much money as possible. So it's really best to limit your new credit card applications to just one at a time. I remember when I was in college and you'd walk around campus and they'd be offering a free 6-inch sub for a credit card. And if you signed up for this credit card, you get a t-shirt, and this credit card they give you a Frisbee. It's really important not to get enticed by those offers or those people on campus. You really want to find a card that's going to work for you and work for your needs. It's better to find a card that you can use for years instead of getting a free 6-inch stub. You also don't want to switch around your credit cards a lot, so you want to open up a credit card and keep that line of credit open for a long time. So it's not just how long you've been using credit, but how long your credit lines have been opened. So once you have a card open, you can begin using it for basically all of your everyday purchases. Just remember, and I can't stress this enough, always make sure that you pay your balance off in full every single month and pay it off on time. That's going to build your credit history and allow you to avoid paying any interest. Paying interest and late fees can quickly outweigh any benefits you get from using a credit card and having a good credit score. Personally, to make sure I'm always on time and I always pay the full balance, I have my payment auto drafted out of my bank account, and it auto drafts and pays the full amount. I then go track my spending in the online portal to make sure that 1, I'm on top of my spending and I'm not spending too much, and 2, there's no fraudulent activity on my card. Now if you're having trouble getting approved for one of those cards, there's a couple other options you can look into. The first one is going to be a secured credit card. And basically the way the secured credit card works is you put up some collateral that you can borrow against. So maybe you put up like $200 and they allow you to borrow against that $200. It's not ideal, but for a lot of people this is the best way to get started. And we'll leave a link in the description to some of our favorite secured credit cards. Another option, if your parents are responsible with borrowing, is to be added as an authorized user to their credit card. This allows you to kind of piggyback on their payment history. And I've heard stories of kids being added to their parents' credit cards as babies, and by the time they're 18, they have excellent credit. Now, while credit cards are an easy way to build your credit, they're not the only way. Also, just paying your normal bills and even your rent can have an impact on your credit score. So you want to be very careful about who your roommates are, because whoever is on the lease, if you're making your payments, it's going to improve your score. But if you're not making payments, you're missing payments, or you're late, it can actually hurt your score. So you don't want to get in a situation where you're on the lease and you're not making payments just because your roommates aren't paying you. And in a similar line of thought, be very careful about co-signing on a loan. When you have to co-sign on a loan, it's because a bank or a lender has decided that they're not comfortable lending to the person looking to borrow money. And so they require that person to go get a co-signer. Now, when you co-sign on a loan, in theory, the person borrowing money is going to be the one paying it back. But if that person defaults and stops making payments, you're now on the hook for that balance. And this is something that's put a lot of people in a real financial bind when they were just trying to help somebody out. But you have to consider there's usually a reason why that lender is wanting somebody to co-sign on that loan. It's because they're not comfortable. It's also important in college to begin checking your credit report at least once a year. Even if you're a perfect borrower, there could be inaccuracies on your report, and you want to get those corrected as quickly as possible. Also, be mindful as you move around. Most college students move around even multiple times during a year. You want to make sure that all bills get updated with your correct address, because you don't want to miss one, have one go to an old address, and then you miss a payment or you're late on a payment and have that impact your credit score. So in short, now is the best time to begin working on your credit score, because it's really going to impact your financial life in many aspects. So that's going to be it for the video. Hope you enjoyed it. If you did, please drop down and hit the like button. Subscribe if you haven't already. And for the simple dollar, my name's Dustin. I'll see you again soon.